On today's episode of Tech Point Africa podcast, Kippa scraps severance pay for laid off staff due to internal fraud. Former Flutterwave CEO Iyin Aboyeji plans to build YC for Africa. Access Bank forays into digital lending with Oxygen X. Another news we'll be considering today on the Tech Point Africa podcast. I am Oluwanifemi Kolawole, and with me in the studio is
Bolu.
And Chimgozu.
Before we go into the stories for today, we are sending our condolences to everyone that was affected by the explosion that happened in Ibadan earlier this week. We pray that you are all comforted. People that have lost businesses, we hope they get back on their feet very soon. From that, we go to another loss experienced by a Nigerian fintech startup, Kippa. There are reports that the company lost 30 million naira to internal fraud, and it has affected their capacity to pay severance for the people that were laid off recently. So, Bolu, can you give us the gist to that story in 15 seconds?
No, I will not give you 50 seconds. But I
Okay.
will try and make it as quick as possible. So, basically, there was an internal fraud, what is being called an internal fraud at Kippa, and it happened several months ago, but they only found out in November, which was a month after staff
Were laid off.
were laid off. So the interesting thing is how it actually happened. So it turns out that after they announced the shutdown of Kippa Pay, right, which is like an arm of the business or one of the services they render, there were massive withdrawals, right? And then sources that spoke to Tech About said it was an internal job, right?
Mm-hmm.
So there were merchants without POS or withdrawing large sums of money, right? And yes, that's basically the fraud part of it. So this now affected the company's ability to now pay severance after it had already promised them that
like they will
severance.
get 1 month severance.
Yeah.
Of their 1 month of their salary as
Exactly.
severance.
So, it just goes to show how serious the issue of fraud, right? Especially with fintechs, with banks too, right? But I think with fintechs, they cannot afford, they cannot afford the amount of breaches they are getting,
Mm-hmm.
right?
And they don't even disclose her forfeit.
Exactly. So, for banks, last year, in 2022, I think they said total fraud. The total amount banks lost to fraud was around 14 billion naira, right?
Mm-hmm.
If that happens to banks, right, which for me I believe have more robust cyber security systems,
Mm-hmm.
right?
Some people disagree.
I know some people would disagree with me, right? But judging by that amount, if you look at the US, for example, right, well, granted, it's a big, way bigger economy, right? But for them, they lost their own banks lost maybe like times 50 of that to fraud,
Mm-hmm.
right? So if that happens to a Nigerian bank, right, and it affects them to a certain extent, imagine what it would be like if it happens to a small fintech like
Startup.
Kippa.
Yeah.
Right? And then we've been seeing this thing happen.
Recurring, like the
Yes.
fraud in fintech is a recurring conversation that keeps coming up, and I'm actually happy that people that are in that space are talking about it. Like we published a recent article. No, not we. Yes, it was published on Tech Point. The founder of Get Equity actually did an should we call it an expose on fraud and fintech and the underlying reasons why they are thriving, why fraudulent practices are thriving in the fintech space. I think we should check that out. We'll drop the link in the description. So the issue of fraud, it's worse if it's internal, it's internally powered. If I so put it like that.
Works it that way, whether it's internal or external. But as much as you're a fintech, what this shows is that you're equally as susceptible to outside influence when it comes to fraud as you are to internal. And in my opinion, the more dangerous armed robber is the person who knows your house and how to get around.
Key.
Yeah,
have the key to come inside without being
it's
stopped.
something, I don't know what policies Kippa, for example, had. There are things you just can't protect. You can't really, you can't be too careful.
Yeah.
But I don't know what kind of policies. But banks, for example, like what Bulu was saying, yes, banks also experience fraud. You may say they have more robust cybersecurity policies, but it's not. It may not be simply down to that. The truth is, if you're a smart person and you want to steal, you are not going to wake up one day. You know that your company does $100 million in revenue and you plan to steal 50 million at once. You probably want to do it slowly because the longer you're in the system,
wait for a loophole too.
Yeah, the longer you're in the system. No, the thing is sometimes, and what you've seen in some cases is, like there's a back door in your own system, which is one of the reasons why it can be difficult. So this might be one of those cases where there's a back door in your system, which means it's someone who was involved.
The developer and probably those people that worked on the tech.
So it's something that you would see a lot. Banks, for example, their own case, it could be a mistake. Some of the things you see that are reported as fraud could also be just mistakes.
Errors.
So errors. They try to ensure that employees are like, will I say alert, and they don't make all those unforced errors. But it's a story that just shows how difficult it can be
to run any kind of business. You
fintechs
get
in particular because
it's
huge.
Yes, it is. We are hoping they quickly address this and find a way around getting back what has been lost. If not everything you get, they should probably have a system in place now that is trying to recoup some of the funds if they can trace the person that was involved internally and all. I was looking through the status of a person, of a developer for a fintech platform, and it was just sharing on the back of this story, was sharing different stories of developers getting into trouble for issues like this, because these backdoors, these are like weaknesses in their structure that they know, which they actually look out for, that people within the system exploit. I'm hoping that they find a way around it and of course pay the severance that has been promised to the laid off staff. This is not an excuse. Yes, I mentioned the other time that Iyin Aboyeji sprung something on the Nigerian tech ecosystem last night or yesterday evening, that he and his co-founder plan to build YC for Africa, but there's a twist in the modality, and Chungozwin will give us the gist.
Okay, so for Iyin's next trick, he wants to build the YC for Africa. It's a lofty goal because knowing what we know about YC, knowing the impact it has had on the global startup ecosystem, those are huge boots to fill. But maybe just run through what that looks like. So 10 startups will be selected across Africa.
What's the name of the
Accelerate Africa? Accelerate Africa. 10 startups will be selected, sector agnostic, and 5 would be working. It's not going to be a remote program. 5 would be working or learning out of Nairobi, and the other 5 in Lagos. They would all meet up towards the end in Lagos.
It's a year long.
No, it's 8 weeks.
8 weeks.
Yes, it's 8 weeks. But curiously, it is not going to be. So YC gives you money, and this is probably where we would get started talking about all the plans.
Okay.
YC gives you money. When they started out, YC gave out $20,000 for what do you call it, for 7% of your startup, and they did that for a very long time. I think in 2022 they revised their terms and began offering $500,000 to startups. I think for so you get the previous the previous deal, I think they at some point they even increased it to, I think 150,000 or so, but they increased it finally to like 500 in 2022, and you get a certain amount upfront, I think 150,000, and then the remaining 350,000 you get it after the program, like after demo day and all of that. So this time around, Accelerator Africa is saying we are not giving you. There's no guarantee that you get funded, which is curious if you want to build a YC for Africa, because one of the biggest things for YC is you get funded, you get access to a very vast network of founders, investors, regulators, mentors, people who have been there, done that. And without that funding component, or without an assured funding component, it's now worrying. How do you intend? Are you just going to do advisory, intros to investors, maybe intros to corporates for partnerships and stuff like that? So that's the first part that I'm interested in. Secondly, they are doing this with backing from USAID, and they have a $750,000 grant, but they're still not investing. Okay. So I saw a question online, Justin Norman asked a very important question. How does that affect the kind of startups or the kind of investments they make? And just to do a little explanation, so your LPs sort of determine who you invest in. If you have LPs that are impact focused, which USAID is not they are not your typical LPs. They are not a hedge fund. They are not a pension fund or stuff like that. Yeah. So they are likely to be impact focused, which means you're probably not going to be pursuing fintechs.
Yes, it's
right?
probably
You're probably looking at
climate.
You're probably looking at let's see. I mean, you could
People do humanitarian. Sort of.
Yeah, basically anything that has direct impact.
Yeah.
It would influence the kind of startups that you pick. The third question would be if you are going to build another accelerator. We have a lot of accelerators, right?
Yeah.
And it's so he's still with Future Africa. Future Africa still exists, and Future Africa has done deals from like pre-seed up to I think Series A. So why build an accelerator?
Africa.
Also, he's saying the accelerator is not a pipeline into
Future
Africa, that they may invest, but there's no guarantee that Future Africa would do that. So why build an accelerator when you already have a VC firm which has undergone a lot of iterations in the last 2 to 3 years? Okay, maybe not a lot, but they've undergone some iterations in the last, I think this, towards the end of last year, they began to rework some of their approach to investing. So those are some of the questions that we need to ask. Also, saying that you want to build the YC for Africa is maybe I don't know. So I find some of the statements in his interview with Tech About a bit interesting. So for one, you're saying that you're investing in people who would not have otherwise gotten into YC. Not a bad thing.
Not a bad thing, but I'm sorry to interrupt you there. You know, while it might make the case that YC has reduced the number of checks it cuts, it gives to
reduce the number of African startups. It's not just Africa, to be fair.
Yes, like
it's
generally.
Everybody.
So people are literally looking for money.
Yes, and that's another thing. Founders typically don't. Not just founders, like right. Even some people who run accelerators, they tout it as their what do you call it, as their advantage over the others. That they give you funding. They don't. It's not just we are telling you learn and then we push you out. They put it as an advantage because
funding.
There are a lot of accelerators that do that.
Like, when you want to do work for somebody and they said I'll pay you
with exposure. Yeah. So in this case, they're now telling you, we'll pay you with access, basically, because yes, we can't deny that
it is important.
Iyin has access. His co-founder too has. She used to be a vice president at MasterCard. So that's like they have a they have a network they can introduce you to, right? But founders would always want that that funding component. It now means that if you're not going to give me funding, you have to give me something that is equal to that funding that you would not be giving me, or maybe even more than it.
Yeah.
There's something else that it just escaped my mind. Let me see.
So why you are looking for that? Why you're looking for that? I'm not against this move, but is the intention behind it that kind of bothers me, because there are several accelerators
Exactly.
that some are not even like, don't even call themselves accelerator, like they are funds, like Google Black Founder funds. For instance, they still give you access to not just funds, they give you access to credit, Google credit, advertising credit, and all you get. But you're promising these people storytelling, how to polish their storytelling. You're promising them how to figure out their product, how to do business development, how to build a team, which are typical things I can learn from a webinar. You know, but I know that you are giving these people access to a network, but I think the money part is still very important. It's still very important.
So that's
an equivalent, something like
it's
an
important, but it leads me to something else. Storytelling. There's only one reason you're teaching storytelling:
to sell your idea so that you can get money.
That's the only reason. Which means
I should be able to stand before your network that I have access to.
Prepping these guys for foreign investors. That's what they're doing, and there's nothing wrong with it. But what it shows you is
then we can't call it YC for Africa.
For Africa.
Maybe not. Maybe. I mean, yes, that YC for Africa. We have this tendency to bandy tags around. Last year, Bloomberg made a documentary and called him the Mark Zuckerberg for Africa. Let's not go into that, but maybe some of these terms that we bandy about. Yes, I get it. You're trying to make it like relatable so that people just know at immediately what you're trying to do. But sometimes you just bandy terms around. Early this year, I said, stop calling yourself leading when you're not leading anything. Like, words you have meaning, man.
Focus.
Like, no,
focus.
What I'm focusing. What's actually have meaning, right? If you say you're the leading fintech in Africa, right?
What do you want to call
if you say you're the leading fintech in Africa, and we have 101 fintechs, you're not leading any of them. So who the hell are you leading, right? So let's be using words.
Because I told him to focus, he didn't.
Oh, let's be using words like knowing that they have meaning. So yes, YC for Africa, good dreams, but how it plays out is very important. YC has been around for roughly 15 years. Someone born in, not 20 years. YC has been around since 2005. That's a very long time. So it's helped them to build up to what they are today. It's good that founders have one more way for them to, get access to mentors that they may not have had before. But really, without funding.
But the comment you make about probably prepping them for foreign investors, I think it's not. It might be solving the issue of giving them access to more funds, but it's not solving the challenge of not getting local investors in local startups.
I mean, that's an entirely different conversation. First of all, you people don't have local investors. Let's be honest. It's an entirely different.
They are saying they want to become
the YC for Africa.
For Africa, which means that we are trying to bring together local investors.
No, that's not. No, that is not.
I know
what YC for Africa is saying is they are bringing like the prestige, the network, the funding, the achievements that YC has. We want to replicate it. That's what I interpret as YC for Africa.
When you say you got into Accelerate Africa, there's this prestige
exactly.
that comes with
usually when people go through YC, they are able to raise at higher valuations. They are taken more seriously by investors and all of that. Well, a lot of it has slowed down in the last 1 or 2 years, but all the best to them. But really,
possibility.
Yeah. Time will tell.
Yeah, time eventually.
Let's take back in 15 years.
God.
For you cannot build YC for Africa in 2 years now.
Yes,
Sure.
YC
so let's take back in 15 years.
How old is YC?
19 years.
Sorry, my math is 19 years. So let's fine. Let's take back in 10 years.
Better.
Let's take back in 10 years. Some of their first investments were Airbnb.
No, 10 because the growth rate with things that have to do with money in Africa don't really. Okay.
Yeah, I should complete the thought.
No, don't worry. I'm just pointing it out.
No, like some of YC's first investments,
Exactly.
Airbnb,
Are these ones making
Reddit.
investments?
You said?
Are they making
They're
investments?
not. They're not. Okay, yeah. So some of their first
So
investments.
you just say I'm an ex Accelerate Africa.
I mean, it's just a backing. We know. We know what this thing is. It's ex Harvard, ex Google, ex Harvard, sorry, not ex Harvard because it can't be ex Harvard. Sorry, ex Google, Harvard trained, Stanford MBA. All those things help to get you in the door. So if you say, oh, Accelerate Africa, hopefully they've gotten to the point where you're like, oh, okay, if they accepted you, then yeah, it makes it easier.
Hopefully, okay. So let's quickly go into Access Bank, getting into the digital lending space, getting
approval in
principle. They've not gotten the
approval in principle.
They've not gotten the license to go into digital lending, but yes, they're getting into it with Oxygen X, which is like a rebrand of QuickBooks, which was like their loan app. I actually have a history with QuickBooks.
Yes, personal testimony.
Testimony time. Yeah, I have an history with QuickBooks. That was where I got my last device. That was in 2020 when it was still active. It was interesting because before the middle of 2020, it was no longer active. And I think it's for reasons like this, the same reason why they are just launching into that space. Now, Chingozi, do you want to give us a few more details into that launch?
Well, what do I add? Nothing really. So when you got yours with QuickBooks, it was restricted to like access bank customers. The plan now is more people can access this. So they are not commencing operations yet, as we all know, until they get the final approval. I can't remember exactly how many months it takes, but for the most part, you get like within 6 months. I don't know of anybody who has announced approval in principle that did not receive it. I may be wrong, sure, but typically they end up getting it. So it's just like a formality. But now more people beyond Access Bank customers will get it. Yeah. It's interesting coming from Access Bank. Access Bank has been on an acquisition spree in the last 6-7 months. So they are solidifying their plans to be one of Africa's, if not Africa's largest financial institution. Yeah. So getting into fintech is like a good move for them. Yeah. So I just have, a few questions, a few thoughts on that. So, you know how hot fintech is?
Yeah.
We also know how difficult lending is.
Yes, I'm even surprised Nigeria. They decided to go into the lending space because their counterparts actually just go into the fintech payments, yes, digital banking space, payments.
The problem is going into payment, so you can do digital banking. Really, that one is kind of easier.
Yes,
you can easily just onboard your existing customers.
Yeah,
but for payments, it's always acceptance. They're kind of getting in late, so they might be restricted to the number of transactions they process. So maybe they may not do a flutter wave level of processing yet. But digital lending makes a lot of sense if you ask me.
Although harder.
Yeah, although harder, of course, but it makes a whole lot of sense if you ask me. Why? We know how much of a need credit is. A thought that has been playing in my mind for the last 2 weeks is how do you unlock credit at scale for Africa?
Trust.
And it's so far a lot of the progress in that space has been led by fintechs, right? But a major commercial bank getting in might be a good thing. The problem has always been how do you ensure that you're not how do you ensure that the profile of people you're lending to can actually repay? And if they can't repay, how do you what is your recovery mechanism? It's Access Bank is regulated. They will not spam you with calls. They won't threaten your father, right? And that's one problem. That's already something that they can't do to recover the loans. So they have to do everything within the ambits of the law. Yeah, everything has to be ethical. So that's the problem. How can they give out loans? Now they are saying it's no longer just Access Bank customers. If it was an Access Bank customer, you have access to his financial history.
Exactly.
Yeah.
But now you're opening it up to everybody. So
I think
I'm
they
hoping-
will have stricter checks and KYCs.
Yeah, I mean, ideally that's the case. But every other person has stricter. Carbon has very good KYC regulations. Doesn't mean that it's necessarily easier for them.
Yeah,
There will be some issues.
you know the thing with lending players in the lending app that are fintech, you get is that they want to make sure they are able to acquire a lot of customers within a short time. So most of the KYC are non-existent, right? They say get a loan in 5 minutes, that kind of thing. Access Bank might not be able to do that because
No, you so
they would try to check your credit.
Get a loan in 5 minutes. We could change. We could change the wording.
Wordiness, yeah.
We could change the wording. Yes, you can still get a loan in 5 minutes with Access Bank. So I'm not holding brief for Access Bank, right? But you can get your loan in 5 minutes. The 5 minutes is from the point you apply to the point the loan is disbursed, not from the point you create an account. Because God help you, you use a network that shall not be named. You will not get your loan in 5 minutes.
Yeah, but
So-
at least they will do their.
Yes. So the
Can
thing
just
is,
give you loan. So what makes loan retriever harder is because you accountability. You've kind of removed the accountability from the customer and put it upon yourself, right? At the point of you giving them that loan.
I don't get. Sorry,
Right.
explain that.
So you are trying to say you don't have to worry. I'll just give you the money and then you pay me back.
So
But banks-
apart from
Because
your
I'm an Access Bank customer. You get they have like if a feature in their app, Access More, where you can access loan, right? Even as a customer, if I want to access loan there, they still have to check my eligibility, and this is something that lending platforms usually do not pay much
No,
attention
so-
to.
it depends on the lending platform you're talking about. I group them in two. That the serious people know that they need to make money. They're the ones that are just faffing around. They just want users for whatever reason, and hopefully they just hope that they can milk out as much as they can. But I'm using Carbon. They will have to pay me at some point because of the promo I'm doing. I've been using Carbon for maybe 4, 5, 6 years. I don't know how long, but I've been using Carbon for a very long time, right? First time I got a loan from Carbon, I did not get a millionaire. In fact, I could not get a millionaire, and that was something a lot of digital lenders were
Lenders
doing.
too. They will give
Yes,
you-
I don't have your financial history, but I get access to certain information that kind of predicts to some degree whether you
Your
can repay.
credibility.
So I'm getting access to your contacts. I'm getting access to your so when you give them access to your messages, for example, they can scan through to see, okay, there's inflow and outflow of money in this account that's kind of regular, and then you submit a bank statement. For the ones that are serious, you submit
Yeah.
a bank statement. That bank
Exactly.
statement shows them your inflow and outflow.
Yeah.
So now they can predict to a certain level that, okay, this guy gets 10,000 naira every month, so we can lend him 3,000 naira or maybe 5,000 naira, knowing fully well that if we give him a 2-month repayment period, he can repay us in 2 months comfortably.
Yeah.
The problem we've now seen is that some people, you come to them, they give you 100,000 naira when the highest money that's entered into your account in your entire life is 5,000 naira.
Yeah.
You just cannot repay in 2
I think we are
months.
saying the same thing. We
Yeah.
are saying the same
So-
thing. Like Access Bank going into this space have a lot of structure in place already. This is not their
Hopefully,
first.
hopefully.
This is like they are just doing a standalone for
Yeah.
loan. They've always been in the
Yeah, of course.
lending space. You get it's part of financial services. So they have a lot of structure in place, and the chances of them making the same mistakes some of these lending platforms make, having those loopholes, are lower.
Yes, I mean, the other problem now is always adoption.
Adoption.
and scale. That's the other question you would have. Adoption and scale. So
if they ride on their current customer base, I think it's a good place to start.
that's a good place to start, Sha. But I don't know. It's probably it's not as easy as
I
the
make it sound.
traditional. Yeah,
Yeah.
they would have to. Yes, now they have like an existing customer base that they can always tell. Oh, you guys can now borrow using this platform, right?
Yeah.
But they are not. If that's what they wanted to do, if they wanted to just leverage on those guys, they don't need to launch a standalone app and then make it open to everybody. What they are now doing is, we want all of you, regardless of the bank you're using, to use us.
Yeah.
So, I mean, some people think that the best thing for them to do is sort of partner with fintechs instead of just going it alone. Some people think they should partner with fintechs. That is probably something that would work for them, because, so for example, we will talk about Kuda, but Kuda has gotten 7 million customers in less than 5 or 6 years, which is impressive, because think about how much it took likes of Access Bank, First Bank, UBA
to get that number.
So they've done user acquisition has always been very fast. You could talk about whether it's profitable or not, but user acquisition has always been very quick. So they typically have more reach. The fact that you can also deliver these services through a smartphone makes it easier. One problem has always been with the technology of established financial institutions. That technology is always a problem. I will not name the bank that I use, but man, sometimes it's a big problem using that. It's almost like they employ a different set of engineers from what fintechs use.
Yes.
Which is surprising, because it's the same country you're hiring from.
Yeah.
But almost all of them seem to not
have it together.
That digital banking aspect looks like they struggle. So maybe that's somewhere they could partner. Well, I mean, there's a whole lot we could discuss about this, really. Unfortunately, they're giving me waving the flag for me to stop.
To say what?
What do you want to say?
I was just going to talk about how it is interesting that a lot of banks are now
building fintech products.
Which now
which
makes me think that in a few years to come, I think the people that will be making the most money in the financial services space will be people that provide infrastructures. You guys were talking about how they will need your bank statements, things like that. But
the likes of Lens Square, for instance, in the lending space.
So we might now start seeing platforms that will make that thing easier for them, where that platform now has like a machine learning program where in a few minutes it can look through a person's financial transactions, their financial history across all their bank accounts, and then give you an estimate that if you borrow this person this social amount of money, this person can return, based on all the calculations we've done, this person can return it at this amount of time. So I really think we are seeing the money points.
So for instance, now the line is blurring between traditional and the fintech. Yes, it is blurring.
Not totally.
Okay, maybe I'm speaking for my bubble. I'm speaking for my bubble, but yes, it is.
Banks will still be what banks are, and they'll still be playing a very, very major role in many years to come.
Yes.
But my own is just that the biggest players, right? The people that people are not really seeing.
Infrastructure.
Right? Those people will be making bank in some years to come.
Maybe I kind of disagree, Sha.
Maybe it's
whether you agree or disagree, time will tell. We spend a lot of time in this studio today, and I wish we don't have to stop, but we'll have to round it up here. But there are other interesting stories in the neobank space of South African Time Bank saying they are making profit for the first time in 5 years. Quite contentious.
Is it contentious? They told you they made profit.
I should believe that they make profit.
Yes, even if it's 5 naira profit, it's profit.
It's profit.
But please tell us how much you made in profit. We would like to know, so that I'll know if I should launch the new bank I plan on launching.
Exactly.
Or not.
So we need the details. And also TechCrunch reported that Kuda Bank didn't reach its user acquisition milestone for 2023. And those are some of the news we would have loved to talk about on this podcast today, but for time, also Patricia in the news again. You will find that on our website on their updates of paying back their customers. And then yes, and many more stories that are very hard to keep up with on the TechPoint Africa website. You can go to techpoint.africa to keep yourself up to date with everything happening in the African tech space. You can also subscribe to our daily newsletter, week daily newsletter, Tech Point Digest, which gives you a breakdown. If you can't scroll through everything on the website, you can just subscribe to that newsletter and that gives you a daily breakdown of what happened the previous day in the African tech space. We also have other newsletters running in Tech Point. We have Modern Workplace newsletter published by yours truly, Oluwanifemi, where we talk about different things that are related to work. It's looking like an obsession this day, but we've been talking with people with credibility in the space, discussing and dissecting some of the challenges that people management or people managers face. And I would love you to subscribe to that newsletter if you're managing people, if you're an employer, a manager, or an HR professional. Also, we have Equity Merchant that focused on startups and investment. We also have launching very soon a newsletter for emerging tech. It will be exciting. Okay, watch out for it and subscribe for the ones that you currently run. I will not forget to mention that earlier in the week, Intel Point launched the Nigerian insurance industry report, and is filled with, can I use this word, crazy insights. You get, not just for the insurance companies. We're talking about the fintechs, we're talking about the people that are getting insured, we're talking about people working for insurance company. It has a lot of insights and you would want to check it out. So just go to intelpoint.co and download the report. You can also find other industry reports summarized and other stats on that website. Thank you for joining us once again today. It's always a pleasure. Telling you what goes on in the African tech space. And something interesting is happening tomorrow, Friday, 19th of January. And it's the first edition of Pitch Friday in 2024. Of course, it's a good time to talk about finance because it's the beginning of the year. While people are making new resolutions, others people that run businesses are trying to look for ways where they can stay afloat during the year and also sustain their businesses. So we'll be bringing an expert in at the Pitch Friday to talk about how companies can manage money, because a lot of companies are shutting down. Those that are not shutting down are in acquisition talks because they couldn't raise money. How did they use the money they raised? How did they use the money they are making? So these are the things that these experts will come and teach early stage founders at Pitch Friday. Don't miss it. It's holding at Zone Tech Park in Bagada, Lagos. So make it a date and be there. If you see me, you do what? Hola. Thank you to our audio listeners for always listening to the Tech Point Africa podcast. We are looking forward to your comments. Please send us a comment, nice words, beef, or whatever it is, feedback that you want to give to us to podcast@techpoint.africa. You can also share the podcast with other podcast lovers that you know wants to listen to what we are talking about. And if you're listening to this from any other platform, you can get us on which platforms
yes,
for audio
you can
listeners?
always find us on Google Podcast, Apple Podcast, Spotify, Hayat Radio, or anywhere else you get a podcast.
Thank you for joining us once again. Bye.
Bye.